Welcome to the program. Today we'll talk about collapsing commodity prices. Malcolm Turnbull's innovation statement. We'll touch on a couple of the IPOs out this week and we'll give you some information on investing for your kids. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money. We've only got 2 minutes and we're going to cover each topic in no more than 2 minutes. First question, Paul, commodity prices are absolutely getting crunched at the moment, dragging our market down with it. Your thoughts on what's going on and when can we see some bottoms?
Yeah, hard to stand in front of the train at the moment because we're seeing across all commodities, most particularly oil, but also iron ore, copper, gold even. Nickel, all being hammered. Oil last night touching below $37. I think it closed at $37.
7-year low oil?
Yeah, 7-year low. I mean, it wasn't that long ago. It was 18 months ago. It was over $100 US a barrel. Iron ore yesterday dipped below $40 a tonne. That was $180 about 18 months ago. And so you're starting to see the huge impact. Now, we've been saying for a long time, Marty, that look, you can't stand in the way of this train. I don't think anyone thought it would go as low as this, but at the moment, shows no signs of bottoming. So it's pretty hard investing in resource-based companies. Or at least if you are, you've got to be patient because this thing's, who knows when it's going to turn around.
Yeah, if you look at both the different sorts of commodities, obviously, the falling oil price is hurting energy stocks, but in the medium term, a falling oil price should be good. We've got petrol prices now at record lows. That should sort of feed through to the economy and help other sectors. The iron ore price is a bit different though, isn't it?
Yeah, I mean, that's right. Oil price is actually good for the economy long term because, we consume more, good for tourism, good for people like Qantas.
Yeah.
There's a lot of positives that come out of a lower oil price.
But not for a falling iron ore price.
But not for a falling iron ore price because it is obviously our state governments depend on it for royalties and also our federal government depends on partly because of company tax and of course you're getting a lot less out from the BHP and Rios this year because of the iron ore price. So, and also a lot of those communities are out in the west are going to do it very, very tough. No capital expenditure, everyone's cutting back. So that's
there's no zero-sum gain, is there? With
no, I mean collectively we'd all be a lot better off if somehow BHP could talk to Rio, could talk to possibly Twiggy, could talk to
Vale.
Gina, maybe Vale and in Brazil, and all somehow collectively. I won't say agree because I don't want to. Might be a felony to suggest that someone commit a felony, if that's correct, but also work out how to get the price higher. But it's a question.
They've sort of blown themselves up, the big guys, haven't they?
Yeah, too much supply. And of course, BHP and Rio are saying, look, we're the lowest cost producers, therefore, we can afford to keep producing, pumping it out, and eventually others are going to stop producing. And that'll start to that is sort of happening, but it takes a while. And just too much supply. Moving on,
next topic, Malcolm Turnbull's innovation statement made a bit of noise. Got some mixed reviews. Let's call it the right-wing commentators seem more likely to vote for Bill Shorten in the next election than they do Malcolm Turnbull. But back to the innovation statement, your thoughts on what came out?
I thought it actually got pretty good reviews from the business community. You're right, the crazy right sort of, at the moment, anything that's got a T in front of it standing for Turnbull is wrong. Said it was just a waste of $1 billion. I thought it was directly the right thing. I mean, it's $1 billion over 5 years. I think it was good to reinstate some funding for the CSIRO. I think the seed capital part, the 20% tax offset, I think is probably a step in the right direction. Look,
the bankruptcy piece, what do you think about that?
Yeah, look, I think there's some positives about that. I mean, I think most business groups even have said that's also a step in the right direction.
So the whole notion of encouring people to fail, isn't it? That's still a Silicon Valley line to say, have a crack, don't be scared of it, and actually, if you have a crack, you hopefully will get some success.
Yeah, I mean, that's, I suppose, a negative. But look, we're not big risk takers in Australia. We sort of criticise risk taking almost. I know whether it's part of the national sport or we like to bring people down or whatever it is, but we're not huge risk takers. I think it's a bit of that. It's a good step. So I think the package overall, I mean, look, the words government and innovation don't naturally come together. You don't usually use them in the same sentence. So look, what else can a government do? But I think that's where the future is. And I think we've got to think of ourselves more than a big farm or a big quarry. We have to think about how we can be a bit smarter and we need to foster some of the talent out there.
It's really a marketing initiative, isn't it, at the end of the day?
Well, it's a political statement as well. I mean, if you're going to appeal
open for business,
you're going to appeal to a younger vote, a younger demographic that's arguably with the Labor Party and the Greens, talk about things they're interested in, talk about IT, schooling, investment in science, investment in technology. It's not so exciting to talk about, shutting the borders down or something.
Yeah. Okay, moving on. Next topic, we'll talk about the McGrath, who's a regular contributor to the Switzer website. John McGrath float, listed two days ago. Has had a tough start, but he is a quality operator, and it is a quality business. So your thoughts on where they're at?
Yeah, look, I think this float yesterday came on it was a listing price of $2.10, massively oversubscribed. You couldn't get a piece of it, and I think it's yesterday's trading $1.72.
Yeah.
I can't explain that. I think maybe it's perhaps we just get momentum in these things, and there are people out there who participate.
Charlie Hagan said he thought the market was just a bit disorganised with it.
Look, it might have been. It might have been also that it's triggered some stop losses. There's certainly some people who invest in IPOs, and if it doesn't go up by a certain percent within the first day, they just
get out,
flick it out, and then obviously others have stop losses. You get a 10% barrier, and it goes through 10%, and more selling comes into it. Have a look at it. I think the business is a sound business. There's obviously a little bit of talk about real estate going to be a bit tougher, and John's very focused on the Sydney market, although he's been expanding into other states. But look, it's one for the wary. Sometimes the most hyped up IPOs actually don't do well. So you've got to be careful about the hype before an IPO.
And his strategy does sound pretty sound. He's got about 3% market share at the moment. The big guys in the US have about 20%. There's a company that he's looked at, Reology, I think you pronounce it. They've rolled up a number of different real estate players to sort of get about 20% market share. So he sort of sees a way of putting a whole lot of groups together to own a bigger chunk of the residential real estate market. Yeah,
I think there's a strategy there. And the other thing, lesson for this IPO, have a look at the lead managers. There are some really good lead managers and there aren't, and I reckon the couple in this category are not in that league.
Yeah, okay.
So a lesson to be aware of when you're looking at IPO, look particularly who's the name on the ticket.
Okay, good advice there. Atlassian IPO coming up this week.
The Atlassian IPO coming up in the States. I think Thursday night it's now time for. They're only selling less than 10% of the company, Marty. There's only, I think it's 30 million shares out of a total of 360 or something. So this is Atlassian, Australia's biggest IT company. Have a valuation of somewhere of about $3.6 billion US. So the shares at the moment are indicated between $16.50 and $18.50. That's a $5 billion Australian company, employs over 600 staff here and another at least that amount overseas. So Australia's biggest IT company, and probably Australia's biggest IT success story as well. Listing on the Nasdaq under ticker code TEAM, TEAM.
And they've got one of the world's leading project management and bug tracking tools that everyone who basically is involved in digital technology knows about.
Yep, they're programmed with a software called Jira. Everyone uses it from NASA through to banks. We use it.
Yep.
They've really developed a clear niche, and they are a global leader in their little space of developing some other products. How the IPO goes, we'll see, but I guess there's going to be a lot of demand and a company to watch carefully. And that's what we need, the innovation statement, to potentially produce more Atlassians.
Yeah, absolutely. Finance tip today, Paul. You wrote a great article in the Switzer Super Report that people should subscribe to the report to read. But in a nutshell, you talked about some strategies that people can use coming up to Christmas for investing for their kids or grandkids. Talk us through it.
Yeah, I probably should ask you, Marty, as a proud dad, what you're doing for your daughter for Christmas.
You made me feel a bit guilty then by asking that question. We did open a Commonwealth Bank Saver account, and I am buying some ETFs at the moment.
Okay, well, look, so a couple of things you can do. Of course, you can buy shares for your kids. The number of bank accounts. So get everyone a bank account. That's obviously the starting point.
$1.
Yeah, well, you can do that. I think things like the Youth Saver or the Reward Saver account, where they have basically the base interest rate is 0.01%, but if you make one deposit a month of any size, you get the bonus rate, and it takes it up to as high as, I think NAB is about 3.05%. Okay. Commonwealth Bank is 2.8%. So they're called Youth Saver, Reward Saver account. That's probably the best structure as a bank account. If you can get your child a tax file number, I think that's really important. They can be at any age for a tax file number, but so you can get that. The other thing to look at is a product that's been around for decades, but it's still a good product. They're called insurance bonds or investment bonds. The reason they're called insurance bonds has got nothing to do with insurance, but they have to be issued by a life insurance company. They're a tax-paid investment. In other words, the money stays inside the fund and the fund pays the tax. So if you're investing in an insurance bond, there's no tax consequence to you if you hold it for more than 10 years. They have what's called an automatic child advancement policy, so you can set one up, you can contribute to it. In 10 years' time, or whatever date you nominate after 10 years, it automatically goes across to your child's name, depending what that is. So if they're 16, 18, 21, you set the date when they become it. No tax for you to pay, no tax for them to pay when it happens, no capital gains tax. And of course, you can add an extra 125% each year. So you can start with as little as $1,000. And you can add in year 2 another $1,125, and you can do again in year 3. And if you hold it for more than 10 years, totally tax-free. So a great product. People like
Well, maybe if you want to find out more about that, you should go to the Switzer Super Report, and in there we've got some examples of some of the products that you could look at.
Yep, absolutely, Marty. That's the way to go. So
that's all we've got time for today. Thanks, Paul. I'm Marty Switzer.
I'm Paul Rickard.
Have a great day.